Hello everyone, welcome to this week's weekly market view for Monday the 14th of August to Friday the 18th of August 2023. My name is Vishal. Let's get started. So let's start with the Nifty chart, and this is the monthly chart of the Nifty. Again, a little bit of bearishness on the monthly candle, but as we are mid-month right now, this candle can even turn back green as we go along. Markets are currently trading at 19,430. So after the big fall this morning, the markets have significantly recovered from the lows, and they have bounced quite strongly. If you look at the weekly level, nothing much on the weekly. And if you look at the daily chart, so this is the level on the daily chart from where the prices have already reacted once. And since now, the prices have broken the low, but they have not been able to close below this low. So in the coming days, we might expect to see a little bit of a sideways to range bound. The bias is going to be slightly bearish till and until this 19,801 level will be actually taken up. If you look at the 75-minute chart, as we speak right now, we have just hit this 75-minute supply, 19,437 to 19,494. And then just above this level, we have another level of supply, which is 19,710 to 19,765. So this is going to be a very, very strong support because market has bounced a number of times from this area. And even today, after the markets did breach this low, this is probably where many people or many shorts would have got stopped out and, the markets getting reversed. But that doesn't mean that the markets will just start turning here and start pushing the upside. So what is key for the market is whether it is able to hold this 19,437 to 19,494 area. And then when we come a little bit down, if we just look at some more cleaner levels, then this is also going to be a key level for the market because this is the area from where the market gapped up, removing all the previous levels of supply, right? So we might expect the market to be a little bit sideways to a bearish range this week. Let us see if this level holds and if prices continue to move to the downside. If you go to the 15-minute chart, on the 15 minutes, we had this nice 15-minute supply zone, gave a nice strong move, touched once, touched twice, went on to break this level of demand also. And now we are coming into another level of supply, 19,448 to 19,479, which is more or less coinciding with the 75-minute level as well. So this will be an area to watch out for. If the market does hold on to this level, then we might see prices breaking and making new lows. But let us see whether that happens in the coming week. And if you go on to the 5-minute chart, it's the same level on the 5-minute chart, this level. And it's about to hit that level as we speak, but we haven't yet touched that level. Right now, we are just reacting to this gap level over here. So there might be a little bit of a, slightly more push to the upside before the markets start turning down again. If you look to the left, the market is pretty much, printing new lows. So without a doubt, the price might just react to this level and start continuing moving downwards once again. So this was on the Nifty. Let's go to the Bank Nifty now, and let's look at some of the key levels on Nifty Bank. Just wait for the charts to load. Okay. So as the charts are loading, we're just going to look at some key levels. So monthly chart is looking a little bit more bearish on the Bank Nifty. Again, this morning also we had a pretty, negative move to the downside. And this was the area which we spoke a little bit last week also. So prices are now into this weekly level of demand, and it will be interesting whether this level holds. If you go on to the daily chart, you will also see that markets are more or less reacting to this entire daily level of demand. You can either mark it like this, or even if you prefer to choose, you can mark this area this way as well. So let's do that again. So this is the area right now. Markets are trying to find a way to move to the upside. The clear level of supply is on the daily chart is right here. This is from where the actual market started pushing downwards. So supply is a little bit above on the daily chart. We are in an area of demand, so likely that we might give a little bit of a bounce before pushing down again. Okay, if we look at the 75-minute chart, let's go to the 75-minute chart and let's look at some key levels of supply on the 75-minute chart. So this is one key area of supply. This rally base drop, markets have just barely touched the level and broken all the lows. We are in an area of demand right now on the higher time frame. So you can see this rally base rally. This is where also the markets are more or less trying to get a little bit of a reaction and trying to push to the upside. But now as Nifty has entered a 75-minute supply zone, that is the reason why Bank Nifty is probably just reacting in a negative way and trying to move down. So it completely depends now on the Nifty, whether the Nifty 75-minute level holds and whether it is able to sustain that level and forces the market to go down. On the supply side, so this area is very, very close to current market price. So maybe we might just halt over there a bit, but I think the better supply is going to be closer to 44,928 to 45,000. 112 outlets. Let's move on to the 15-minute chart and let us see if there is anything interesting on the 15-minute chart. So right now we do have several levels here. The one good level being this area on the 15-minute chart. So let's go ahead and plot this area. And this is an area from where the markets actually gave a nice breakdown. So any move, strong move into this area will probably induce more selling pressure into the market. But let's see whether that happens. All right. So this was more or less the analysis on Bank Nifty. Now let's move on to Finnifty. So let's open the Finnifty chart here. Let's talk about some key areas on the Finnifty chart. So this is Finnifty here. I'm going to load the August contract. So here we have the Finnifty chart, and monthly chart is looking a little bearish. I'm just going to remove all these texts. This is not really as of now, but yeah, if you look at the monthly chart, we are seeing a little bit of a bearish pressure. We are into a level of a demand, not a very, very good looking level, but still it's coming inside that rally level. But what is more importantly to see is how does price hold on to this level of demand. So this was the level of demand, and the moment the price hit this area, we are seeing a little bit of an uptick. So very, very similar to the Nifty and the Bank Nifty, supply zone is a little bit above, way above current market price. We are in a level of demand, so we might get a little bit of a bounce in this market as we go along before the market decides to start turning down and start moving down as expected, thanks to the Nifty and the Bank Nifty. So now if you look at the Finnifty, on the 75-minute chart, there are two levels which are interesting here. So this one over here, this level looks a little promising. It's also coinciding with that 20,000 round number. So I like such levels which coincide with those round numbers. And if the market does move up towards this area, that will be interesting to see whether the Finnifty hits the 20K handle and then starts reversing to the downside. So right now we are all pretty much into that daily level of demand. So trying to take any aggressive shots at current market price would be not a good idea, right? So it's not at all a good idea to go short on Finnifty at current market prices. If the prices do pull back to these supply zones, then maybe fresh shorts can be initiated. All right, let's move on to the USD INR. Let's talk a little bit about the USD INR here. Okay, so pretty much USD INR that we have been talking since quite a few weeks finally is trying to show that it wants to give that breakout to the upside. Now, usually what happens is that, whenever the market consolidates for the longest period of time and, when it decides to give a breakout, that breakout is considered to be a very, very strong breakout, right? Because that's where majority of the short sellers are. And if the market moves in the opposite direction, then those short sellers who have shorted heavy duty positions are going to run to cover their positions, which means they'll have to start buying. And when aggressively anything is bought, then obviously the markets are going to push more to the upside. So just watch out for this 83.32 handle. And if this handle does break, then we might expect to see a very, very big rally to the upside if that happens. As of now, on the daily chart, there is some selling pressure coming in, which is more or less coming from this area of resistance on the USD INR, right? So this is an area to watch out for, and this is going to be that resistance area, right? So strong resistance around this area. So I would expect 83.29 to break, and then there will be a strong momentum to the upside. Else, markets are going to remain sideways with a slightly bearish view on the USD. All right, the stock that we are going to discuss for this week is going to be ITC. It has reasonably corrected from its highs and now coming to a very, very interesting level on the price charts. And we're just going to refer this one chart to look at ITC. Let's look at the weekly chart of ITC. And, so this is where the area from where the markets have started correcting, and the area of demand that I'm hoping ITC should give us a bounce is this area around 433 to 410. So, okay, so if the price does come into this area, this can play out as a nice opportunity, and ITC might, resume its momentum to the upside. So keep a close watch on 433.25 to 410 as a demand zone on the weekly chart of ITC. All right, so this was the analysis for the week. I hope you enjoyed the analysis. Do give your valuable comments in the comment section on the Sher Khan Education YouTube channel. And do like our videos. There are quite a few videos that are posted. Do give us your feedback and keep trading safely. All right, take care everyone, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.